Hi guys, it's time for a new video in the educational series where I explain how I use time and distance statistics to my advantage. In the former video I explained what time statistics are, how I use it and how it helps to remove emotions. So if you haven't checked out that video, certainly do that before you check this video because it has some valuable info you need to know to help understand this concept. So check out that video. If you don't know me, I'm Memon. I'm the co-owner of the Med Academy where we help people become profitable faster by helping them with proven trading strategies that we solve around systematic rules and about statistics. So that helps to remove emotions out of trading and kind of help you to become more of a robot-like trader that follows certain rules instead of someone that handles out of emotions, because that's not how you can become a profitable trader. Let's get into it. So what is distance statistics? In the former video I explained time statistics. So you know that we have the P1 is the first pivot of the day and the P2 is the second pivot of the day. With time statistics, we looked at the hours. Right now, we don't look at the hours, but we only look at the P1, which is this low, and then the daily high, which is P2, that low. Then we raise times because for distance statistics, timing doesn't matter. What we look at is the distance between our daily low and our daily high. Or if we have a bearish day, of course, from our daily high to our daily low. It depends if we have a bullish or a bearish day, what the calculations will be. But to keep it simple, I'm just going to explain it in the most simple way and keep the difficult stuff out of it. What we look at with distance statistics is the distance between the low and the current high. So for today, we can see that's around 3.6% move up. By knowing this, we can use a database, which is the Monoma Analytics dashboard, and then we can see what price has done in the past with moves up and moves down and how price behaves. So the theory behind it is that, let's say this is our low and price starts moving up from there, that it requires energy to push the price up. But just as it requires energy to push price up, it also requires energy to push price down. But the more price pushes up, the less likely or the more energy it also requires to get price back down again. But that means that if you have a good move up, that it is unlikely that price makes a full reversal. And by knowing that, we can use statistics that show us certain numbers which we can gain confidence how likely it is that that low will hold. Besides that, we can also calculate data how on average price moves on a positive or on a negative day. So let's say price is at this point right here, then statistics can show us historically how likely it is that we have a more upside for the day. Right now it might sound a bit unclear, but if I show you the statistics, it will become more clear. So for Bitcoin at this moment, we know that that's the wrong one. Our P1 is here, P2 is there. Let's go to the dashboard. What we can see is that at this point, the distance as I showed is 3.4% from our P1. What this tells us is that historically spoken, the chance is here 9.6% that price will make this much of a move up, and then only in 9.6, so let's say 10% of the cases, price will make a full reversal and takes out this low. In other words, we can say that in 90% of the cases, it won't happen that this low gets taken out because it already required quite some energy to make this move up. So only in 1 out of the 10 cases, there's enough energy that price from here makes a move back to this low. So that already shows us some confidence that this is a pretty good low. What we can further see is this box below here. Here we can see this is showing 70%. So the percentage of days with distance between P1 and P2, so this is our P1, this is our P2, is more than 3.6%. We see that in 70% of the cases, price will make a bigger move between our P1 and our P2. Okay, so now we know that only 1 out of the 10 days, historically spoken, price will take out our daily low, while in 7 of the 10 days, price will make a bigger move between our current low and our current high. So what this tells us is that the low is pretty likely to hold, while more upside is also likely in 70% of the cases. So how can we use this data? We can use this data to our advantage by knowing chances that we take the low out are low, chances we make a bigger move to the upside are pretty high, at least in our favor. Then if we look at basic TA, we can directly see, for example, we have a demand zone right here, demand. What I also see is time statistics. So we have daily P1 at hour 0. In the former video I said hour 0 is the best time to put in highs or lows. So with knowing that, we know that from a distance distance perspective, this low has only 10% chance to be taken out. From a timing perspective, I now also know our 0 is very likely to hold. So based on that data alone, and then only a little bit piece of technical analysis, I know that I am pretty interested today to look for a long position, preferably here, and then write that into at least new daily highs. So that's how I use these distance statistics in the most simple form. If we look, for example, then we can also see that here the distance between the daily low and the daily high is a bit less compared to Bitcoin. So then we can look, what is it for ETH saying? Let's go to ETH. Look, here we see that in 44% of the cases that low can be taken out. So yeah, that's not too confident. However, what's interesting is here that we see the percentage of days with a bigger distance between P1 and P2 is 82%. So for ETH, it's very likely that we will see a bigger move than we currently have. However, then we have to ask ourselves, will that be a move to the upside or to the downside? That's to be seen. Another way how I use distance statistics to my advantage, and with, in my opinion, is the best way, is the dashboard. With the dashboard, this is what I every day share in the Discord server. So make sure to join the server so you can get updates every day on the statistics. If it wants to load, I can show you that. Then this is the dashboard summary page. Here we can see data automatically calculated for the week, for the current day, for the current session, current 4 hour and current hour based on distance statistics. This gives me a quick overview for my most favorite coins to trade, what the current bias is. And this is the most important part. So let's look at the weekly. What can we see? We see exhausted bear, exhausted bear, exhausted bear for every coin. And for this week, if we zoom out, let's go back to Bitcoin. It's not weird that we see that data because this week has been very bearish. Like our day started here at Monday, our week started at Monday, and since then we have gone down only. However, since we have on the weekly an exhausted bear, it means that the trend is still bearish. However, statistically spoken, it's very unlikely for price to make a bigger move to the downside. Quick preview of the pivot zones, but here we can see the pivot zones, and here we see that we already went below our pivot zone. So that means that it is very, very rare that that happens and that we will close the week outside of it. So know that weekly bearish, but that we make a new low is not very likely. If we then look at the current day, we see mostly bull and for some coins a strong bullish. So for a bullish sign means that more upside, that the trend is already bullish for the day and that more upside is likely, since historically spoken those coins will make a bigger distance for the day. So let's look for example at AVE, which is showing a strong bullish sign. AVE. Then let's look at the, here we see our P1 right there, P2 right there. Then we go back to the distance statistics. Then if we have the statistics, we can see that in 31% the P1 can be taken out. Or in other words, in 70% of the cases, based on distance statistics, this low is safe. Then why it's showing a strong bullish sign in the dashboard is because here down we see 86% of the cases price will make a bigger move from our daily low to our daily high. So then we know, okay, 70% sure that this low will likely hold, while it's very likely that we'll make a bigger move to the upside. So then I already know, based on distance statistics, I want to look for long. Then of course you always want to confirm that also with time statistics. Well, what do I see? We have the low at hour 1. That's a good hour to put in a low. So then I know, okay, I'm interested to look for longs today on AVE. How can we do that? And then I like to take a fib from the low to high and see the sweet spot is around here. Then always we look for confluences if it aligns with some levels like demand. Right now I don't see a very interesting level yet. We might have a local range here. So then if we sweep this low, break structure, then I might be looking for long, because statistics show us that this low is safe, higher is likely, so statistics are in our favor. I also like the uptrend we have. If we zoom out, we just have this as uptrend, so we can expect a higher low for a higher high to just continue the overall uptrend we have right here. So then we have the uptrend, we have time statistics also in our favor, we have distance statistics in our favor. So this helps to build confidence to look for long triggers with knowing that this is your invalidation. And that's basically how I use the distance statistics to my advantage. We have the summary page, that's what I every day in the morning show. And we quickly have an overview okay, which coins are looking strong, which are, like here we see it in a bit more complicated overview, but here we see all coins have a bullish bias, almost all coins. And here we see how likely is it that the low gets taken out. So we want this box to be as low as possible, and then this box as high as possible. So then I always like to see what do we have for Tau, for example. This might be an interesting one to look at. Here we see daily P1, hour 0, daily P2, hour 7. Okay, good daily low based on distance, time statistics already. Interesting to know. We see that only in 15% of the cases, price will make this much of a distance and then take out the low. Or in other words, in 85% of the cases, this low will hold based on distance statistics. Then we can see percentage of days with more distance, that's 88%. So in 88% of the cases, price will make a bigger distance between this low and this high. We already see that price is pretty deep in a retrace. So if we pull our fib from low to high, we are currently in the optimal entry zone based on fib levels. Then quickly looking, do we have some, well, I see for example that we have a 5-minute demand zone supporting our low. Price just stepped into that. We are leaving quite some liquidity behind on the downside. However, you always want to break structure. So I would say you want to at least wait for, as it stands now, for this high to be broken. If we can hold around here, respected demand, hold around the fib levels, and we break structure, then you can be fairly confident to take a long, let's say somewhere around here. Use the daily low as your invalidation, because we know from a distance and timing perspective that's a good low to hold, and then we can aim for a new high, because statistics show us that it is very likely, to be precise, in 88% of the cases we will make a bigger move to the upside. So then we can target this high, for example, and then you have a pretty solid trade. And that's without doing any proper technical analysis. It's just using statistics. And then if you know statistics are backing up the idea, then you just look for confluences with TA, and then you can make pretty confident trade ideas, because you know that time statistics are behind your idea, distance statistics are behind your idea, and you only need some TA and a market structure break for some triggers, and then you can put on your trade and go do whatever you want. There's no need to be stuck to the screen all day. That's a waste of your time. You want to trade because you want freedom. So put in your trade, go do something else. If you get stopped out, well, unfortunate, everything was in your favor, statistics were in your favor. So you know, if you keep doing the same thing over and over again, on the long run, you will be profitable because you trade with the probabilities in your favor. This was the video about the distance statistics. I hope it's clear. If you have any questions, please let me know in the comments. Then I can answer them in the next video. Next video I will go over, most likely over the pivot zones. Very, very interesting tool as well. And then after all the technicals are explained, I will show in real life how I use it to my advantage. What is my morning routine to look at the dashboard, scan coins, use my TA, and by that way use all this data to my advantage. So I thank you for watching this video once again. Make sure to check the Discord server if you want this real-time updates, and then I see you in the next video. Cheers.